Hello friends, welcome back to A to Z, another chapter of A to Z Accounting Pro video. So today we are going to discuss about accrual of expenses and the treatment of the accrual of expenses in the trial balance, income and expenses account and balance sheet and the changes in equity. So we will cover all this part in this video. So let us go back to the concept first. What is accrual? Accrual means something is due but not yet paid. So in that sense, let us look into the lecture, the textbook readings. Recording of an expense that was incurred in one accounting period but not paid until a future accounting period. Accruals differ from accounts payable transactions in that an invoice is usually not yet received and entered into the system before the year end or month end, whatever. I mean, most of us in UAE and I think in all over the world there is we are closing the books on a monthly basis. Of course there is yearly closing is there, but if we are closing the books on a monthly basis, if there is monthly closing of the books, we are doing it properly, then the year end closing will be very much easy. So here how we can accrue and how we can recognize the expenses, whether it is accrued or prepaid or whatever. So if you just for an example, we are today, this is 2nd of September. Okay, for example, one of our staff, our company staff, did not receive his salary for the month of August. Until 31st of August he did not receive his salary. Let us assume that. Yeah, so we need to pay him. If we didn't pay him on 31st, until 31st of August, we need to pay him in the month of September. At the same time, we need to close the books of August with proper numbers. So how is it possible? Because we didn't pay that amount. So here in this case we need to accrue that amount of salary, whatever unpaid for the month of August. So we need to accrue that salary on 31st of August. That means before payment we need to show that one in the books. That is what is called accrual. So here this salary is already due. His salary is already due on 31st of August but not paid. That is due but not paid. Yeah. So on a specified date, like here on let us say on 31st of August, we need to pass entries in the books. Okay, so salary for the month of August for 2023 unpaid amounting to USD 5,000 to Mr. X. So his salary for the month of August is still not paid. So on 31st, during the month closing, we need to pass entry in the books. So $5,000 is an expense to the company. It's a salary expense of Mr. X. So that is an expense. So here if you are going back to the golden rule and the shortcut we have already created, we have already discussed earlier. If you don't know this shortcut method, just please watch my earlier part 1, part 2 complete accounting cycles, then you will understand it better if you are watching this one for the first time. So any increase in assets or expenses, just debit the concerned account, and any increase in liabilities or revenue, just credit the account, and vice versa. Any decrease will credit, any decrease will debit here. So here we have to identify the entry for this accrual, yeah, in the month of August. So this salary is still not paid. So here at the same time we need to book an expense in the month of August. August 2023, we need to book the expense into the P&L account. So here salaries account will be debited. Why? Because there is an increase in expense. So debit that account with $5,000. Yeah, salaries account will be debited with 5,000 because there is an increase in expense in August, because the salary, his salary already due in August. That is why we are debiting the expense account in the month of August 5,000. And where it will be credited, here comes the accrued salaries. Accrued salaries means that is payable to an employee or payable to a third party, right? So it is a liability, right? The salary is payable on 31st of August. That is a liability. The company is liable to pay $5,000 to Mr. X. It is not yet paid. So we create an account in the chart of accounts, and under liabilities, accrued salaries. Okay, accrued salaries, and we will credit this account because this is a liability and it is increasing, right? Any increase in liabilities will be credited. So we have credited here. So this is the entry we have to post in the month of August for this accrual. Salaries account debtor to accrued salaries 5,000. And after closing 31st August, let us say like 2nd or 3rd of September, we have to pay, or whenever, I mean in the month of September, in the very next month we need to pay to Mr. X because it is not yet paid. We just booked the entry. So during payment we need to record the payment entry. So how it will be? So here we have already shown in the balance sheet a liability of 5,000. So this liability will be reversed in September. Okay, you need to check the date. This is in August and this is in September. So while paying the salary of Mr. X, we need to debit accrued salaries. Why we are debiting? Because we are removing that liability. Yeah, we have created a liability in the month of August, and in September, because we have already paid him, we are removing that liability and we are debiting it. Okay, because here a decrease in liability will be, here increase credit, so decrease will be debited. So the decrease in liability means accrued salaries. We are reversing the same entry with 5,000 and we paid it from the bank account. Bank account is an asset account, and it is credited because this is the amount is decreasing. Yeah, decreasing means we have credited the bank account. Cash is going out. Okay, now I think you have already understand the concept, the basic concept. The basic concept here, only you need to identify, you need to check the amount payable, the actual amount payable. Okay, so in the month of August we have booked this entry because we know his salary is 5,000. In the same way, whatever invoices we receive for the month of August, the expenses we have incurred for the month of August, we need to book in the same way. For example, we received our office rent is around let us say $2,000 per month, but the landlord did not send. He maybe he forgot or whatever. He did not send us the invoice for the month of August. So that means we will not book it in the account. No, that is wrong. We need to book that rent amount because we know the amount. If we don't know the amount, then just let us approximately, okay, a round figure we need to book. Okay, so here let us discuss the rent. It is 2000 for the month of August, but we did not receive any notification, nothing from the landlord. Anyhow, we are still in this office, so we need to pay the office rent. So we need to book, we need to accrue that expense even without an invoice. That is what is called accrual. Yeah, we did not receive the invoice, but we know the amount and we need to book that amount as accrual. So that is how our all the expenses for that concerned month will be booked, and the actual result, the actual business result will come into effect. So this will help the management to decide further to take further decisions on management or whatever, even for regulatory authorities that is required for monthly closing. Yeah, so this is for salaries. So the rent, for the rent also the same procedure. There is no change for accrual of any expenses. There is no change. The same procedure. It will be rent account will be rent account is an expense. Yeah, expense account, and we will debit 2000 and accrued rent. Here we create another new account, accrued rent, and it is a liability. We will credit that 2000, and in the next month, very next month, we will debit accrued rent with 2000 and bank account 2000 while payment. Okay, so now let us move to the next part of trial balance booking. Okay, let us book this into the trial balance. So here the trial balance, we have already discussed the same trial balance in earlier videos also. So this is just for your information. Yeah, the first part, all the accounts are asset accounts. Okay, and this is the primary group, and this is the second group, debit, credit, and the balance of total balance of TB, the trial balance. And the second part is liabilities. Okay, and the third part is capital, and then revenue, and then expenses. So this is a typical example of a corporate company's trial balance. There will be numerous accounts, because whenever a new item is coming into effect, a new accounting head, accounting name, accounting code, we need to create whenever is necessary. Okay, being an accountant, you need to take the decision of whether to create a new account or not. Okay, now this accrual of expense, let us post this entry into trial balance. So his salary expense is debited. Salary is an expense account, so just go to the salaries part. Here is salaries. It is debited with 5000 and credit the accrued salaries. Accrued salaries, credit with 5000. So this is at the end of August, 31st of August. This is how your trial balance look. It's matching 860. And this same effect we need to check whether it is reflecting in the income and expenditure or not. So here we have booked salaries 5000. So this is a selling and general and admin expenses. Okay, so we need to link, this is here selling, general and admin expenses. Okay, we will add here 5000. Yeah. Okay, now the next part also we need to reflect in the concerned financial statement. Here this is accrued expenses, this is a balance sheet, and it is a liability. So we need to book this 5,000 into the balance sheet. Here is the balance sheet, this is a credit amount. So it is trade and other payables, that is a primary group, because this is accrued. It is same like accounts payable, but there is a slight difference only because we did not receive the invoices for the accrued expenses. But for accounts payables, trade payables, there should be an invoice while booking. Okay, now this accrued expense into the balance sheet. Here trade and other payables, this is the section trade and other payables. So let us look whether it is came or not. Now here only this part has taken, so we need to include this. Okay, so just I'm adding it manually here, just for your Now there is a difference of 10,000 because we have done a small mistake here. Instead of deducting, we have added. Okay, now our balance sheet also tallied. Yeah, I think you understood the concept, the basic concept of accruals. Here the balance sheet account, it shows 305,000 total, trade and other payables 305,000. How it came? These two. Yeah, there are no other liabilities here, so you can see 305. Other than capital, we don't have any other liabilities yet. Okay, so here you can see the income and expenses. Income and expenses, we don't have any profit. It is zero now because we have just entered only one entry of selling and admin expenses, the salary payable as on 31st of August 2023. So this is the there is no changes here. Also in changes in equity, there is no change because there is no loss yet. It is zero. I think this is what today we are going to discuss, and in the coming days I will be discussing more about the balance sheet items and month closing entries, and also we will be discussing about the VAT booking and the entries of VAT booking, and a lot more items will be coming in the coming days. Hopefully you enjoyed this video. So if you like this video, and most importantly if you like and understand this concept, okay, if you understand this concept, please subscribe the video, okay, and like the video, share it with your friends. If you have any doubts or if you didn't understand this concept, please comment your queries, and for more clarifications I can definitely come back to you and explain in a very good levels. So let us please keep in touch. Okay, that's all for today. Thank you.